Welcome back to Pro Tinker. It's Saturday, October 19th, 2024, and you know what that means.
Time for your Protinger market update.
You got it?
What?
We're diving into,
A bunch of reports this week.
yeah, we're talking
Barron,
Wall Street Journal.
Barron's Financial Times.
We got it all.
The whole 9 yards.
Whispers from those exclusive analyst circles this week.
Yeah, so if you want to sound smart
Yeah.
at, your brunch tomorrow,
Right.
you've come to the right place.
This is your cheat sheet.
This is it. So to kick things off,
Okay.
we got to talk about China.
Okay.
Third quarter growth,
Yeah.
4.6%.
It's
Which,
dark.
I don't know, on the surface doesn't sound terrible.
That's so terrible on the surface.
Oh,
It's all about the why
right.
behind those numbers.
So tell me more about this. Why?
Well, you see, this isn't just a blip. It's part of a larger trend
Okay.
that points to some deeper concerns about their property market and also consumer confidence. Oh, so that's why everyone keeps whispering about deflation.
Exactly.
Well,
Like,
totally, yeah.
while everyone's focused on the slowdown,
Right.
the bigger story is brewing here.
Okay.
That China is facing its longest price decline since 1999.
1999. Wow. That feels like a market lifetime ago.
It really does.
Yeah.
And it has some serious global implications.
Okay, like what?
We're talking about a potential decrease in demand for commodities, which could ripple through everything from oil prices
Oh, okay.
to, well, even the cost of your favorite tech gadgets.
Okay, now you're speaking my language. I mean,
Yeah.
that's a big deal.
Right.
So are they gonna try to fix it? What are they gonna do?
Well, that's the million-dollar question.
Okay.
You know, they were hinting at those massive stimulus packages.
Right. Yeah.
You're holding back, especially on direct handouts to consumers.
Oh, so no helicopter money this time around.
Not yet, anyway. And, some analysts are saying that might not be the best long-term strategy, but others are saying it will prevent them from falling into a debt trap.
Right. Right. Yeah, that makes sense.
Yeah,
It's kind of like damned if you do, damned if you don't.
exactly.
So for someone like me, I'm not a financial expert like
Yeah.
you, but I dabble. I've got some investments in the Chinese market.
Sure.
What should someone like me be doing?
Well, I would say, number one, stay informed.
Mm.
And number two, stay agile.
Stay informed, stay agile.
Got it. Because things could change quickly.
Right.
But pay close attention to those earnings reports that are coming out.
That's good advice no matter what market you're in.
Exactly.
Speaking of markets, we got to talk about the U.S. market.
Okay.
The S&P 500 is just hitting record highs, like 6 weeks in a row.
6 weeks.
It just seems, I don't know, a little unrealistic given everything else that's going on.
Yeah, it's easy to get swept up in those headlines, right?
Exactly.
It's important to look beyond just the surface.
So this is what economists would call like animal spirits.
It could be. That's the million-dollar question.
Right.
And to answer that, we really need to look at what's driving this rally.
Okay, so what is driving this rally?
Well, one key factor is the performance of investment banking.
Okay.
Those bank earnings calls.
Yeah.
Surprisingly upbeat.
Really?
Yeah, a lot of mergers and acquisitions activity.
Really?
Yeah.
So companies are merging, they're buying each other.
You're feeling good.
Spells confidence, right?
It does, but on the consumer side,
Yeah.
it's a little less clear-cut.
Makes sense.
Spending remains relatively strong, but
Yeah.
there are hints of,
Yeah.
caution creeping in.
Well, yeah, I mean, inflation's still a thing.
Exactly.
And I imagine people are probably a little nervous about, making big purchases and stuff.
Exactly, and that's why those corporate earnings estimates for 2025 are going to be so crucial.
Oh, okay.
Because they're going to give us a much clearer picture of,
Yeah.
are they truly optimistic about the future,
Like,
or
are they just riding this wave?
right, are they just riding the wave?
Okay, so we got to watch what consumers are doing, but then we also have to watch
Corporate earnings.
corporate earnings
Those are the two big ones.
to really understand what's going on.
Probably not. Okay.
Because right now, those are painting two slightly different pictures.
Right. Yeah. It's a little bit of a mixed bag in the U.S. market.
It is a little bit of a mixed bag.
So cautious optimism.
Yeah, I would say so for the time being.
Okay.
But remember, things can change quickly,
Especially with an election right around the corner.
especially with an election right around the corner.
Right. So speaking of, complex situations,
Right.
what's going on in Japan these days?
Well, they're walking a tightrope,
Okay.
trying to balance growth with inflation.
Oh, boy.
So on the surface, things might be looking up with inflation slowing slightly in September.
Well, that's good, right?
That's what everybody wants.
Lower inflation. Yeah.
But it's important to understand what's driving that.
Slowdown, and in Japan's case,
Okay.
a big part of it is government energy subsidies,
Okay.
which are essentially temporary band-aids.
Okay, so it doesn't sound like a permanent fix or anything.
Right. The real test of whether inflation is truly under control
Right.
is going to be wage growth.
Because if wages go up, then prices go up, and then boom, you've got inflation again.
Precisely.
Okay.
And Japan's largest labor union is demanding a 5% pay increase.
5%.
5%
Wow,
next year.
that's huge. What are the chances that actually happens?
That is the question.
I mean, they've been dealing with wage stagnation for, it feels like, forever over there.
They have, and that's what makes this so interesting, because
Okay.
it's kind of a high-stakes game of chicken.
Right.
Because if they give in,
Yeah.
it could reignite inflation.
Yeah.
But if they refuse, it could stifle economic growth.
Oh, wow.
And all of this is happening against a backdrop of an aging population and a shrinking workforce.
Oh, boy. Talk about between a rock and a hard place.
Right.
Yeah. Yeah, so it sounds like Japan is another one to keep an eye on.
Absolutely.
Okay, so let's move on and talk about what's going on in the U.S. housing market.
Okay.
Because it feels like things have been kind of stalled for a while now with, like, buyers and sellers kind of in this weird standoff.
Yeah.
Is there any sign of that changing anytime soon?
Well, there is an interesting twist this week.
Ooh,
While the overall U.S. housing market remains pretty sluggish,
Yeah.
we're seeing some unexpected activity in the luxury market.
Really? You mean like the $1 million homes in those
Yeah.
like really expensive markets like Seattle and San Francisco?
The very same.
Wow, okay.
It seems counterintuitive.
Yeah.
But lower mortgage rates have a bigger impact on those larger mortgages,
That makes sense.
making those high-end homes slightly more attainable.
Okay, so a 1% drop for like a $300,000 house. Not a huge deal, but for a $2 million house.
Exactly.
Huge.
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 And let's not forget
Yeah.
those ultra-low interest rates from a few years ago.
Right. Yeah.
Many current homeowners are like locked in.
And they're not selling.
They're not selling,
Yeah.
which, you guessed it, drives up prices.
Supply and demand.
Supply and demand.
It always comes back to that, doesn't it?
It really does.
Okay, so interesting. So if you've got a lot of money and you're looking to buy a house,
Now might be a good time
now might be a good time to do
to
it.
get in on those high-end markets.
Okay, less competition, potentially.
Yeah, potentially more room for negotiation.
Okay, all right. But for like, the average home buyer out there,
Yeah.
sounds like they just kind of have to wait it out still.
Yeah, for the most part, yes.
Okay.
But it highlights how,
Yeah.
interconnected things are, even within a single market, like housing.
Yeah, totally.
What happens at the top can really influence the entire market.
Trickle-down economics. But for houses, all right, so we've talked about a lot today.
We have.
We've talked about China, we've talked about the U.S. market,
Mhm.
Japan,
Right,
housing.
right.
Before we wrap things up, was there anything else that you saw this week that you thought was kind of interesting?
Well, I always, with the holidays coming up, I always like to look at the holiday spending forecasts.
Oh, yeah? Good call.
And this year, it seems like holiday spending is expected to grow,
Oh, okay.
but at a slower pace.
So maybe Santa's watching his budget this year.
Maybe so.
Yeah.
It seems even Santa isn't immune to inflation concerns.
Right, exactly. Exactly. Speaking of things that impact our wallets,
Yeah.
what happened with oil this week? Because, oh my God,
Oh, my goodness.
every day it was like a new headline about
I know.
the Middle East.
It was a roller coaster.
It was.
Right.
Yeah.
Fears of an immediate Israeli attack on Iranian oil facilities.
Right.
That obviously caused prices to jump.
Yeah, of course.
But then when it was reported that Israel was willing to kind of target military installations instead,
Which, arguably, better.
slightly better.
For everyone, maybe.
Yeah.
Right.
Yeah, we saw the biggest weekly drop in oil prices in over a year.
Wow. So it really impacted things.
It did.
Wow.
But here's where it gets interesting.
Right.
Even with those fears kind of subsiding,
Right.
the U.S. slapped more sanctions on Iran's oil trade this week.
Okay. And
Traders barely blinked.
really?
Yeah.
So are they just kind of over it?
I think they're desensitized to the news,
Interesting.
to the sanctions, especially when it comes to oil.
So they're just kind of like, whatever, it's not going to really change anything.
Yeah, we've seen this all before.
We've seen this all before.
Right.
Wow, that's fascinating. So what does that tell you?
Well, I think it reveals a growing skepticism of
Yeah.
the effectiveness of sanctions, especially in a global economy that relies on.
Right, because you can't. How do you isolate one part of the global economy,
Exactly.
especially with something like oil?
Exactly. And that brings us to my final thought.
Ooh, hit me with it.
With all this talk of
Yeah.
stimulus packages, interest rate hikes,
hmm
are we ignoring the deeper structural issues?
Okay, elaborate on that because I feel like that's a really good point.
Are we so focused on,
Yeah.
kind of putting out the immediate fires
Right.
that we're not looking at the root cause?
Right. We're not fixing the foundation.
Yeah.
We're just like putting,
Putting Band-Aids on things.
Band-Aids on a crumbling foundation. Yeah.
Exactly.
Yeah. It's like we're all on this big economic ship,
Right.
and we're sailing through some choppy waters.
Choppy waters, yeah.
But we're so busy arguing about like who gets to steer and what color we should paint the deck
Right.
that we're not realizing that the hull has holes in it.
Exactly.
Yeah, right.
We're ignoring the fundamental.
We're ignoring the fundamentals. Yeah.
Yeah.
And sooner or later, those holes are gonna
They're going to catch up with us.
they're gonna catch up with us.
Yeah.
Doesn't matter who's steering.
Doesn't matter who's steering.
Doesn't matter what color the deck is. Yeah.
Exactly.
That's a good analogy.
Thanks.
Okay.
Yeah.
So like how do we fix that? Like how do we start thinking more long term?
Well, I think it starts with,
Yeah.
a healthy dose of skepticism.
Okay.
Don't just accept these headlines
Yeah.
at face value. Dig a little deeper, question the assumptions, ask yourself,
Yeah.
what's the motivation behind this? Who benefits from this particular narrative?
So like be our own like investigative journalist almost when
Exactly.
it comes to this stuff.
Exactly.
Right, yeah.
The more informed we are, the
Right.
better decisions we can make.
Absolutely. Absolutely. Well, I think you've given us a lot to
A lot to think about.
think about this weekend.
Hopefully over a nice cup of coffee on a Saturday morning.
Exactly. Exactly. Well, thank you so much for joining us. This has been another great discussion.
Always a pleasure.
And to all our listeners out there, we'll catch you next week for another Pro Tinker Market update.
Sounds good.
See ya.